Amount due at the end of the year, nil. Installment paid 7,000 for third installment. 21,600 paid at the time of first year. 20,700 paid at the time of second year. A minibus is purchased for rupees 3,20,000 under hire purchase on 1/1/2018. Asset account data to hire vendor account. Minibus account data to hire vendor account. He pays the down payment. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to have Advanced Financial Accounting, second semester Unit 2, Session 5 of BCom in favor of accounting for hire purchase. I told in the last session what is hire purchase, a credit purchase system. There are two parties, one is the hire seller, one is the hire purchaser. So when the hire purchaser purchases the goods, when he pays the down payment, on the date of the down payment, good passes from hire seller to hire purchaser, but the legal ownership will not be transferred till the, because I will assume that assume that the cost of the machinery is 1 lakh. He pays the down payment of 10,000. What is the balance now? 90,000. That will be paid in 3 installments of 30,000 plus interest, 30,000 plus interest. So when he pays this last installment, then only the goods, legal ship of the goods passes from hire seller to hire purchaser till hire seller is the owner. Once he pays the last installment, automatically the goods passes from hire seller to the hire purchaser. If there is any default from the point of the hire purchaser, hire seller can take back the goods, or if the hire purchaser feels he is not in a position to pay any one of the installment, he may return the goods to the hire seller and he can claim whatever the amount he has been paid. It's an agreement between the hire seller and the hire purchaser. So all ledger account based on entries. What's the first entry? Asset account data to hire seller account in the books of first entry. Journal entry in the books of hire seller, first entry. When in the books of hire purchaser, then you can go with the hire seller. In the books of hire purchaser entry, asset account data to hire seller account data to bank account, interest he has to pay to hire seller, interest account data to hire seller account, first installment hire seller account data to bank account, then depreciation account data to asset account. So in the books of hire purchaser, he purchased the asset or entry, asset account data to hire seller account data to bank account, then interest is there, interest account data to hire seller account, he pays the first installment, hire seller account data to bank account, then he pays the depreciation account data to asset account, transfer entry, profit and loss account data to interest account to depreciation account. Second year start first interest, we start with the interest account here. Then we will move on, same thing as in the first year. So who has to pay the interest? The purchaser has to pay the interest. No, to whom? Hire seller. So first entry, interest to hire seller account. Then he pays the first installment, bank account data to hire seller account. So interest will be then depreciation account data to machinery account, profit and loss account data to interest account to depreciation account. So we'll move on. This is for 10 marks question. Each installment amount and the rate of interest are given, but the cash price of the asset is not given, is missing. So we have to calculate the cash price. First, interest is equal to total amount due at the time of the installment into rate of interest, 100 plus rate of interest. Which is a 5%. It is 5 divided by 100 plus 5. It is nothing but 5 by 105. Rate 5% divided by 100. What is the rate of interest? 5 by 105. It is a 2%, 2 by 102. This is a method. Now I will show how to calculate this. Very, very simple. Mr. Sono purchased a mobile phone on hire purchase system. As per terms, he is required to pay 8,000 down payment, 4,000 at the end of the first year, 3,000 at the end of the second year, and 7,000 at the end of the third year. So how much he pays? 4 plus 3, 7 plus 7, 14,000 plus 8, 22,000 he is going to pay. So here each installment includes the interest. How to calculate the interest? What's the rate of interest? 10%. You are required to calculate total cash price of the mobile phone and interest paid with each installment. Slowly, this is for 10 marks. Section B. We'll move on. So interest is equal to total amount due at the time of installment is the rate of interest, 100 plus rate of interest. Here 10% is there, 10 by 110. Amount due at the end of the year, nil. Installment paid, 7,000 for third installment. Total amount due at the end of the year is 7,000. Interest due, 7,000, 10 by 100 is 636. 6,000 minus 636 is 6,364. So come back to second, what to do now? Third installment minus interest, add second installment, 6,364 plus 3,000 become 9,364. On that, calculate the interest. 10 by 110 is 9,364 is 851. Deduct 851, it becomes 8,513. So you brought down here first year 8,513. That installment amount should be added. It becomes 8,513 plus 4,000 becomes 12,513. 12,513 into 10 by 110, it becomes 1,138. If we deduct now, it will come here 12,533. 11,375. Add the down payment. This is your cash price, principal money due at the end of the each year, cash price. Add 8,000, total cash price become 19,375 plus interest for 1, 2, 3, 4 installment is 2,625. This is the method. Shall I repeat? You take third year minus interest, add second year minus interest, add first year minus interest, add down payment. How it will be? Third installment minus interest, add second installment minus interest, add first installment minus interest, add down payment. That's a cash price. What we have done, same thing. 7,000 at the end of the third year, 7,000, 10 by 100 is 636. If we take the 636, it becomes 6,364. Brought down 6,364. Installment paid 3,000. Add, it becomes 9,364. 9,364 into 10 by 110 is 851. Deduct 851, it becomes 8,513. Brought down 8,513. 4,000. Add, it becomes 12,513. On 12,513, 10% means 10 by 110 is 1,138. Deduct, it becomes 11,375. Add the down payment 8,000. Total cash price is 19,375. Total interest paid 636, 851, 1,138. Totally 2,625. You have to calculate. Hope you understand. This is for 10 marks. Calculate the cash price of the asset from the following. Down payment is 10,000. 21,600 paid at the time of first year. 20,700 paid at the time of second year. 19,800 paid at the time of third year. 18,900 paid at the time of fourth year. Rate of interest is 5% per annum. So we'll move on. Statement showing the cash price and interest. Year, amount due at the end of the year. Installment paid, total amount due at the end of the year. Then interest, then principal money. Fourth year, at the end of the year, nil. How much he paid? 18,900. 18,900. Interest, 18,900. 5 by 1, not 5 is 900. Deduct this. It becomes 18,000. Come back to 18,000. Next, add. Third installment, 19,800. It becomes 37,800. On 37,800, 5 by 105, 1,800. If we deduct, it becomes 36,000. Then 36,000 plus 20,007. Add 56,700. On 56,700, 5 by 105 is 2,700. Deduct, it becomes 54,000. On 54,000, installment paid is 21,600. It becomes 75,600. On 75,600, 5 by 105 is 3,600. Deduct, it becomes 72,000. Plus down payment, no interest is there at 10,000. Totally it becomes 82,000. The total interest is 900, 1,800, 2,700, 3,600. Totally 9,000. Hope you understand. So 10 marks question here. Then this is for 15 marks. A minibus is purchased for rupees 3,20,000 under hire purchase on 1/1/2018. The amount payable is 80,000 on entering the agreement, and the balance in 3 annual installment of rupees 1 lakh each at the year. Depreciation is charged at 10% per annum on written down value method. Show the necessary ledger account in the books of hire purchase under credit purchase with interest method, in the books of hire vendor under credit sale with interest method. So we'll move on now. Here, calculation of interest. What's the down payment? 80,000. 3 installment of 1 lakh each. 1 lakh into 3 is 3 lakh. Totally he paid 3,80,000. Real cash price is 3,20,000. How much he paid more? 60,000, which is considered as interest. I will repeat. The down payment is 80,000. 3 installment of 1 lakh each. 1 lakh into 3 is 3 lakh. It becomes 3,80,000. Cash price is 3,20,000. So 3,80,000 he paid. The cash price is 3,20,000. How much excess paid? 60,000, which is considered as an interest. Then, how to calculate the interest of the each year? Amount due at the beginning of the first year is 3,80,000. How much down payment? 3 lakh. Then amount at the second year, 3 lakh minus 1 lakh. Every year he pays 1 lakh. It becomes 2 lakh. At the end of the third year, 2 lakh minus 1 lakh is 1 lakh. So take the ratio. 3 lakh is to 2 lakh into 1 lakh. Cancel the zeros. It becomes 3 is to 2 is to 1. Calculator of interest first year. 60,000 into 3 is to 3 plus 2 is 5 plus 1. 3 by 6. 2 by 6. 1 by 6. 3 by 6 of 60,000 is 30,000. Second year. 60,000 2 by 6 is 20,000. Third year, 60,000 to 1 by 6 is 10,000. This is the total interest. We'll move on to ledger now. Calculation of a depreciation. Cost price of the minibus, 3,20,000. Division at 10% first year, 32,000. Balance is 2,88,000. Division at 10% for second year, 28,800. Balance 2,59,200. Division at 10% for third year, 29,920. It becomes 2,33,280. Minibus account, debit, credit. So asset account data to hire seller account, minibus account data to hire vendor account. On this 10%, by depreciation 10% is 32,000. By balance carried on 2,88,000. Brought down 2,88,000. By depreciation 28,800. Balance is 2,59,200. Brought down 2,59,000. 10% of this is 25,920. Balance carried down is 2,33,280. Brought down is 2,33,280. We are preparing the hire vendor account. What's the journal entry? Asset account data to hire vendor account. Minibus account data to hire vendor account. He pays the down payment. Hire vendor account data to bank account. Interest of this year. Interest account data to hire vendor account. Then first installment. Hire vendor account data to bank account. Totally 3,50,000. How much carried down? 1,70,000. Brought down to this. 1,70,000. Interest of the second year is 20,000. Then he pays 1 lakh every year. The balance is 90,000. So your balance carried on 90,000 brought down. Interest of this year 10,000. Totally 1 lakh. He pays 1 lakh rupees. Hope you understand. Then we'll move on. Interest. interest to hire vendor, transfer to P&L account data to interest account, interest to vendor by profit and loss account, interest to vendor by profit and loss. Just a transfer entry. What's entry? Interest to hire vendor, transfer to P&L account, 30,000, 20,000 transfer. Hire vendor, transfer to profit and loss account. Go with the depreciation. Depreciation account data to asset account, minibus account, transfer to profit and loss account. Depreciation to minibus account by profit and loss account. So last entry we are passing journal entry, profit and loss account data to interest account, to division account. Same entry we are passing division account data to asset account by profit and loss account. It's only a transfer entries. Then. So these are all this goes to now we are hire vendor seller. Where we have did is hire purchaser. Now we'll go with the hire vendor. So what's the entry? Hire purchaser account data to hire sale account, hire sales account, 3,20,000. He pays the down payment. Bank account data to hire purchaser account. Then we charges hire purchaser account data to interest account. He pays the first installment. Bank account data to hire purchaser account. Totally 3,50,000. The balance carried down is 1,70,000. Brought down 1,70,000. Interest. Hire purchaser account data to interest account. He pays the second installment. Bank account data to hire purchaser account. How much carried down? 90,000. Brought down. Interest. Hire purchaser account data to interest account. We receive how much? 1 lakh. Bank account data to hire purchaser account. What is the entry? Hire purchaser account data to sales account. When you receive the first down payment, bank account data to hire purchaser account, interest, hire purchaser account data to interest. When you receive the first installment, bank account data to hire purchaser account. This entry you have to remember. How will be? Hire purchaser account data to sale account, by bank account data to hire purchaser account, hire purchaser account data to interest account. We receive the first installment, bank account data to hire purchaser carried down, brought down. Same thing goes. So we'll move on. Interest account, hire purchaser account data to interest account, transfer to profit and interest account data to profit and loss account. Second year also, hire purchaser account data to interest account, interest to P&L account. Third year also, hire purchaser account data to interest account data to profit and loss. It's only transfer entry. Hope you understand. We did the ledger account in the books of both the party, hire seller and hire purchaser. 15 marks question, and I solved in this session 2 10 marks question, calculation of the cash price. If the cash price is missing, how to calculate the cash price? Remember that will come for 10 marks. Then regarding this 15 marks question, I solved in the books of hire purchaser, in the books of the hire seller. Ledger account I prepared. If you know the journal entry, it becomes so much easy. So in the books of hire seller entry, machinery account data to hire seller account or asset account data to hire seller account. Then in the books of this is purchaser, what's the entry? Asset, he purchased the asset account data to hire seller account data to bank account, interest account data to hire seller account. Then we paid the first installment, hire seller account data to bank account, transfer entry, profit and loss account data to interest account to division account. What's the entry goes? We are doing in the books of hire purchaser entry, asset account data to hire seller account data to bank account. He charges the interest now. Interest who is to pay to interest now. Interest account data to hire seller account with interest is law. When he pays the first installment, hire seller account data to bank account, then division account data to asset account, profit and loss account data to interest account to division account. In the books of hire seller, first entry, hire purchaser account data to sales account. When he receive the what's called first down payment, bank account data to hire purchaser account, first installment due. First entry, what's the first entry? Hire purchaser account data, asset account. In the books of the hire seller, he says hire purchaser has to pay. So hire purchaser account data to sales account. When we receive the first down payment, bank account data to hire purchaser account, he charges the interest. Hire purchaser account data to interest account. We receive the first installment, bank account data to hire purchaser account, transfer to P&L account, interest account data to P&L account. Same thing goes to second year, same thing goes to third year. Hope you understand. Slowly go through the journal entry. According to journal entry only, we prepare the ledger. Hope you understand. We'll meet in the next session with another problem. Till then, goodbye. Meet in the next session.